buddy?
Preparing to live stream, setting up your meeting.
Buddy.
We're in. Preparing to live stream, setting up your meeting. I cannot have that going though. There you go.
Yeah, man, we are live. Looks good, Mike.
Yeah. Hey, man, I finally did something. I finally did something right.
Whatever, man. You struggle to do something wrong, brother. Listen, you've been kicking butt and taking names. So
yeah, there we go. There we go. So, well, cool. I don't know who's going to show up for these things. We just started them as brand spanking new, but live from San Antonio is Cashflow Mike. So, Karen, Jeff, here's the thing. Now, Jeff, I know you've been gathering some questions from folks that either had meeting conflicts, stuff like that. Karen's here for a reason. But here's what I'm trying to do with this. I'm not trying to teach as much, right? I'm trying to show people how to do this. How do you actually use the tools? How do you have the conversation? How do you get it done in a real live scenario, right? And I'm just going to do it like Dave Ramsey does, take calls and make it happen, right? So that's where I'm kind of getting this from. And I'm going to use all the techniques and the tools that we have at our disposal and go through scenarios. Yeah, we'll do it that way. So this is neat because usually I prepare. I have stuff prepared. I can't prepare for this, right? Because I never know what's going to happen. Just like a regular client meeting. So Karen, before we begin, what's going on in your world? What's happening?
Well, I'm just kind of showing up to learn more. Learn more, listen more, learn more. Everything's going pretty good. Glad to be back. I was out for a little bit, had a little bit of surgeries done, but I'm back. So excited to just keep moving forward.
Right on. Anything happened this summer that you're outside of surgeries, I guess, but
going to take a little vacation in about a week and a half.
Where are you going?
Going to Oceanside, California.
Oh yeah. I was just out there. I was just out that way. So yeah, perfect place to go. Okay. So here's what we're going to do. Again, I don't know what's going to happen, but I'm going to show you what you do. And usually when there's people on here that are already members, I tell them to put in the chat when they hear one of the techniques to call it out. So Jeff, did you hear a technique?
That was clear the noise, Mike.
Yes, there's the noise right off the bat. Clear the noise right off the bat. So yeah, you knew that one. What was the question I used, Karen? You remember?
What's been going on?
Yeah, what's going on in your world, right? So yeah, that lets somebody get something off their mind. Okay, so Karen, you got a question? We'll start with you, or you want to start with Jeff?
Start with Jeff.
Start with Jeff. There we go.
Mine comes from a client I was working with this week myself, Mike, and they were just struggling. I don't understand finances, and I had worked with them on reframing, like, hey, you're learning, you're getting better, all the cool things I like to do. But the question was, I have a very limited amount of time each day, each week to dedicate to where I need to spend time inside of my business. And what are the particular financials that a small business owner should be paying attention to?
Yeah. All right. So, let's role play this conversation out, because there's two problems I saw there, right? That you gave me, two burning issues. Do you know what the two burning issues are that you said?
No, not right off. Go ahead, teach me.
Karen, I heard two burning issues there. And so usually if I'm kind of confused on which one is which, I will go to the next questioning technique. So let's just role play it out. You ready, Jeff?
Yep.
Hey, Jeff, wait a second. Have we met before or no?
So this was my first time working with a client. So you can say it's first. Yeah.
All right. Hey, Jeff, I'm glad we get the chance to work together. Hey, what's been happening in your world? What's going on in your business? How do you think I can help?
Well, I'm a solopreneur. I spend all my time kind of running and doing, and I just haven't been able to pay myself. And when I sit down to look at my financials, it just doesn't make sense with me. Everybody says use QuickBooks. I don't even know what I should be tracking or what's important, or how all of that works to be able to lead me to being able to pay myself.
Yeah, so super interesting, right? There's a couple different things that I heard, out of that. And let me just kind of rephrase it and see which way you're leaning right now. We can kind of start on one or the other. Sound all right?
Yep.
All right, so for a second there, I thought, you're saying, hey, you're busy, time is, every part of your day is kind of filled up, things are happening, and you don't really know, right? That was the second part. You don't really know what you should be focused on. So I wanted to kind of break those two down because one of them is about time and what the way you run your business, and the other one's about education and things that you should be kind of keeping your finger on. All right, so which one do you think is a bigger problem for you right now?
Probably education.
All right, so with education, I'll tell you what, look, what I think, and let me ask this so you tell me more. When you say you're looking for things inside your business that you should be paying attention to, tell me more about that. What makes you think that there's other things you should be paying attention to?
Well, just to the sure fact I'm not able, I'm not spending enough time tracking any kind of, money. I've got enough money in my account that I'm buying my stuff. I get my supplies in, my customers are happy. I just don't have at the end of the month, I just don't have enough money to pay myself. So I'm putting as much money back into the business as I can because it's important for the business to survive.
All right, so here's something weird that's happened is that now I've got a third problem, right? So, I mean, first of all, we got a kind of an operational process type problem with time, finding the right time to do things. Second, we got, I've got all these reports in front of me. What do I do with them? How do I just get started? How do I put my finger on the pulse? And then you said, hey, listen, I don't pay myself enough. I don't think I have enough money to do that. So if we were going to rank those, right, because there's three different problems that we kind of just talked about right off the bat. One is about your time, getting some of your time back. Second is about, learning a little bit about how to use financial statements today so you can at least get started down the path of using them. And the third one is, maybe there's some cash leaking out of your business why you can't, pay yourself, where do you want to start today?
Well, I think it's important, as time goes on, if I can't pay myself, I'm not going to, my household and just the different bills that I have to cover from my personal expenses. I think it's going to end up I'm going to end up having to go get a job if I can't figure out how to pay myself.
Yeah, I totally agree. So I'll tell you what, I got this technique I call mining your business for hidden cash, and it kind of gives us a quick look into the business to see if anything's leaking out. Because one of the things I want to do is make sure that you get paid. So have you got time? We
Yeah,
can kind of go through
absolutely.
that. All right. Okay, so before I transition to the tool, Karen, what'd you see? You're on mute.
Asking, reiterating what they're saying so
Mhm.
that you both are on the same page and clarifying the issues that they are having.
Yeah, so I used two questioning techniques. One was clear the noise to get them to start talking. The other one was called the explorer. When I say, hey, tell me more about this or that, right? And what I'm doing is I'm listening for one of six burning issues. And the six burning issues are debt, cash flow, profit, the future, operations, and education. And believe it or not, in less than what, 3, 4 minutes, we come up with three burning issues. Which was there's an operations problem, right? Which he doesn't seem to have enough time. So I would dissect, okay, well, why don't we have enough time? If that's the thing, let's start there. Or he says, education, I got these things, I don't know what I'm looking at. Okay, how do I use the financial statements? That's an education problem. The next one was I'm not paying myself. That's a cash flow or a profitability problem, and I don't know which one. He can't pay himself because he's not making money, or he's making money and he just doesn't have the cash, right? So that's why I use mining your business to determine is it a profit problem or a cash flow problem. Make sense? Okay. Then what was really important is I want him to say the problem out loud and then agree, let's go work on that. So what I've tried to do in this advisory framework is say, hey, listen, It's not about the problem that I see. He could hand me a set of financial statements and I go, oh yeah, we need to spend time here, 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 and here. But I need him to say it because then he's invested. He goes, here's my problem. I need help with this. Now we're invested. I know there's other problems. And that's what advisory services is trying to get somebody to the next step so we can just keep solving the problems. And when you solve all the problems, you're not done. It's improving. Now, hey, we're doing this. We got back to average. We're doing as good as everybody else. Let's do a little better. Right. And then you start the improvement process, which keeps, and again, if you do this, you get them engaged and they stay with you longer, right? Because they feel like every time they sit down with you, they're not being lectured, they're solving problems and working on their business. All right, cool. All right, so what I said was I'm going to go to, Jeff, do you have numbers or do you want me to just use the demo?
Yeah, I use some numbers I don't have. The other thing I want to tell Mike, just for everyone, I'm sharing our link here that we're live. If you're watching us live, you're tuned in, you have questions on cash flow, Mike, put them in the chat. I'm monitoring the YouTube stream chat along the way here. If you have comments, anything you'd like to just add for the greater good of the show, make sure you do that.
There you go. All right. So, Jeff, I got this app I call the Clear Path to Cash, right? And the Clear Path, it kind of highlights some of the stuff that we use or some of the problems that we talked about. So let me get logged in here. And if we were brand new like this, I'll show you how I would put data in, right? I would just create a quick little company, and all I need to do a company is NAICS code and the company name. That's really all I need. Is these three things you don't really need the industry, so you can just pick anything for this technique. And if you don't know the NAICS code, you can just click on find NAICS. And what type of company is this, Jeff?
It was a bakery.
Yeah, so bakery, baked goods, I don't know, something like that. So that's all you do is you click on it, and if it's a retail bakery or a wholesale commercial baker, it automatically populates it. So I've got the industry database available to me that fast. All right. So what I'm going to do is use the demo company. And with the demo company, it already has some data in there. But if I needed to put data in, I would go here. And I'm not worried about all this data because we're solving one problem. So I'm not worried about any of that stuff. I would just go to hidden cache and I would worry about the 9 numbers down here that I need to do this technique. And I say, hey, while we're together, I'm going to type these in. You pull up your income statement, you pull up your balance sheet. I'll type it in. And this only adds like 3, 4, 5 minutes to the process, to that engagement. And you just type in these numbers. When you're setting goals and we're brand new, I don't really know what the goals are yet. So what I do is I take whatever the industry average is. And if it's 2.4, I'm like, going, what if we got 2.5, right? Or gross profit. What if we got 32%? What if we got just barely, just a little bit more out of each one of these? What would that be like? Now, I go to analysis and I'm going to go to hidden cache, and I would have created a period and it creates a chart just like this. So, all right, Jeff, yeah, hey, I get it, man. One of the reasons why it feels like you're not able to pay yourself is that we're leaving about $13 million. And this is weird sample data I pulled up. Maybe there's a better company I can choose. It didn't have $13 million. There it is. Hey, one of the reasons why it probably feels weird is that, there's about $300,000 that's leaking out of your business right now. Now, it's not all bad news. Don't get me wrong. This is actually good news because now we know where to go, right? We know where to fix it. Let me kind of explain what's happening on this chart because you probably haven't seen something like this before. But this is a cash leak map, right? And it takes and compares it to either your own goals, which I just kind of made up on the fly, but we can also compare you to other people in the industry, right? How you run is probably very similar to how other people run. So that's what this chart is saying, is that there's $300,000 leaking out of your company, and it's in 4 of the 6 categories, right? Which is, again, a good thing. Now, let me explain how this works. The 0 line is what you would look like if you were exactly average, right? If you were doing the exact same as everybody else, you wouldn't see any bar chart. You just wouldn't. It would be you're exactly like everybody else on all categories. Anytime it's green and above the line, that means you're doing better than the industry. Anytime it's red and below the line, that means you're doing worse. Okay. So does that make sense, Jeff?
Yep.
All right. So here's some cool stuff. Let's just go ahead and say this right off the bat. This is operating expense. Now, the way this chart looks at your business, it looks at it from two different directions. One is what I call cash generating activities, which is kind of a vertical analysis. It starts with sales and we just subtract things out till we get to profit, right? That's kind of vertical math. The other way is cash conversion activities. How long does it take for money to come to the business, right? That's what we call cash conversion or horizontal analysis. And that's like how much inventory you have, how long does it sit on the shelf, how long does it take you get paid, how long does it take you pay your bills, right? That's basically what this is doing, looking at your business from two different directions. Follow me on that?
Yep.
So it's about, does the business model work? And how long does it take for things to happen inside your business? That's the two things we're looking at here. All right, with that in mind, what I want to do is show you that you're doing pretty good. Most advisors that you go talk to, if you go ask them, hey, if you want to go make more money, all you got to do is cut expenses. Well, I'm here to tell you that that's not your problem. You actually are really good at managing your expenses. You're spending less than most people to run this bakery, right? So that's a good thing. So let's not worry about that right now. Matter of fact, if we have to have money, we can say, hey, wait a second, we also have a sales problem, and I'll explain what this is. We might have enough money here to hire a salesperson and go out there and improve the sales, right? That's basically what this is telling me. So let's go ahead and turn off the operating expense. Now, here's where the biggest four problems are, but you're also doing something pretty good. And Jeff, this is about how fast you pay your bills, right? This AP turnover. This is just how fast you pay your bills. How long does it take you to do that? Now, I'm gonna ask you a question. Are you paying any late fees or are you getting bad phone calls from your vendors or anything like that? No?
No.
Yeah, all right. So, hey, as long as none of that's happening, don't worry about how you're paying your bills. Keep doing the exact same thing because you're doing better than average, right? This also means you're sitting on the invoice a little bit longer than most people. That's why I asked you those questions because I don't want you to hurt your relationship. So kind of put a pin in that when you're paying a little bit slower than others, that, hey, you don't want to hurt your relationship with your vendors. Make sense?
Yeah.
All right. Let's go ahead and turn that off because you're doing good there. Now, there's $1 million sitting there in front of you. Think about it, right? Not only is there $1 million, we know exactly where it's leaking out of your business because these are red and below the line. This tells me where the biggest problems are in your business. And if you don't know where to start to fix a business, start with the longest red line, right? Because that's where the most money is. Now, in your case, I'm going to ignore sales because sales right here, it says that you have enough stuff. I assume you have enough ovens. I assume you have enough trucks. I assume you have enough stuff. That's what it's telling me, is that you have enough stuff to just sell more. We just got to figure out how to put more, baked goods on shelves. Does that make sense?
Yep.
So that's going to take the longest for us to fix because we got to go out there and actually hit the pavement and go out there and find a sales pitch that works. So let's not worry about sales today because your problem was I need more money to pay me. Well, in these three areas, if we were playing Name That Tune, Jeff, I'd say I could put $700,000 in your pocket in 3 moves. You remember that show?
Yeah.
All right. So here's where the problem is. We have a gross profit problem. What that tells me is that we have a problem in our cost of goods sold or our pricing. What the vendors are charging us, remember how you pay a little slower than most? I want to make sure that they're not charging you more because they know you pay slow, right? Because some people will do that. They'll actually say, hey, give him a 10% bump in his price because we have to wait longer for money. So let's make sure that that's not one of the reasons why, your gross profits off is that we're paying more to the vendors. We may have to shop some flour or whatever else you buy. The other thing here is, are we pricing? Because, pricing high enough? And this is saying that if we were zero, that means our price would be the same as the market. This is telling me you're priced a little low in the market. Do you feel that way or not?
Yeah, I'm always, I mean, everybody's always telling me I should go up on my prices, but I'm just afraid the customers won't be willing to pay that.
Yeah, okay. Well, And we'll talk through that. And matter of fact, I want to stick a pin right in that one. So remind me to address that, right? Will my customers pay more? Because there's $400,000 for you right here, right? There's $400,000. Now, inventory, we got a little too much inventory, and for you, that's probably not a good thing, right? I assume breads and stuff like that you bake goes bad.
Yeah, shelf life. Yeah.
So, but it's not the biggest problem you have. So it's a small one. We just got to figure out how much of certain items that you sell and make sure we're only making that much and not more, right? And I've got some worksheets that help us do that. And then the last one is getting paid. Have you got some folks that sit on their invoices, kind of like you do? I mean, it kind of looks that way. Maybe
Yeah, that's part of the issue is chasing, just finding time to go and, I got some outstandings and just, again, it's one of those things where I run out of time to chase that down sometime. I could probably hire somebody to, or should hire someone to look after that.
Okay. All right. So one of the things that we want to do is then look at the process. So I've got three things that we need to look at. So let me go down here and just kind of add some homework for us, and then we'll figure out what we're going to do, because I don't want to forget what I just told you. So the first thing we want to do is check vendor pricing, right? Expected control. We want to increase gross profit. Right. And if we do that, I'm just when are we meeting again? When's the next time we're meeting again?
2 weeks.
2 weeks. So 1, 2. All right. So we'll just put it out for 2 weeks. And what we're trying to do is do, cost reduction there. All right. We got that one. Then I'm going to put in, we want to check pricing. Increase gross profit. We're going to meet in 2 weeks. And that is about cash flow optimization. All right, because we're trying to get more cash in. And then we said we need to sales versus inventory. Need to get that done. And we want to well, I'm great at typing. Isn't that the worst thing in the world is to watch somebody else type?
Yeah, when I do it, you're correcting my spelling. Was my word out in Texas? I can't remember what it was. You were like, hey,
yeah, that's right. All right, and the last thing we talked about was we want to review the. I'm gonna call it invoices because I want to make sure that we're getting the invoices out in time too. Process. We want to reduce the amount owed. That now for 2 weeks from now. Boom. And that's going to help us with cash flow. All right. So you see what we did there? Jeff, we got 4 things we can work on right now. So because we still got some time in our hour, which one do you want to start with?
Yeah, the biggest one would be good. The gross profit.
All right. So when we look at this, when we're talking about gross profit, you see how gross profit, you're getting about 22% and everybody else gets about 35%. You see that?
Yep.
Here's what that means. For every dollar that comes in sales, this is first of all, this is the most important number on the income statement. Not just sales. Here's what I'm going to tell you about sales, Jeff, that sales is only a measurement of how much work you did, right? That's it. Gross profit is the only money you have to spend on your operating expense and put in your pocket. So that's why I focus on it, because you told me you need more money to pay yourself. Well, that's where this money comes from. You pay yourself out of gross profit. Make sense?
Yep.
All right. So you're getting 22%, which means when you sell a cupcake for $1, you get 22 cents. Everybody else around you gets 35 cents, right? So you see the difference there, 22 and 35?
Yeah, I want to ask you about that outside of role here, just for our people watching and for the business owners that may be listening to this. Do you find is it acceptable, or how, when I see that industry average, do I want to meet that, or is it okay to be above that, or should I be below it? Well, how should that industry average be applied for our business owners or accountants that are watching that? Do you have any advice or guidance on that?
Yeah, I love it. Right. Great question. Here's what I would say, right? When you were in school, Karen, I'm gonna ask you, when you were in school, what was the average grade?
Probably a C.
C, right? That's average. Hey, I just did the requirements. I met the requirements. I'm average. So I'm going to tell people that if you're not average, our first job is to get you up to average, right? Because right now, if we were in school, Jeff, you'd be getting a D or an F, right? This is getting a C. This would be like getting a B, right? So if I'm telling you what you're going to do with these industry averages, I want you to look at it as you're getting a C in your business. And I don't think you're the type of guy, because we're sitting here today, I don't think you're the type of guy that wants to get a C in business. You probably want a B or an A, right? Like me, my grandpa would pay me extra for A's.
Right.
So yeah, that's the same thing for you. When you get an A in business, you get paid extra. So does that answer your question? Right?
Yeah. I think it's great. And here's was just the point I wanted to push out. You shared that with me before, but I think it's powerful when I'm working with that business owner that's struggling to price because of just their uncertainty. So I think that's a really cool way for the way you put it.
Oh, thanks. Appreciate that. Here's what I'm gonna do. Let's talk about
Check your
price.
screen, Mike. The Zoom screen was a little there you go. You fixed. Good. Thank you.
All right. So Jeff, let's just talk about price, because you made mention that you were afraid you'd lose customers if you increase price, right? And right now you're about what would you say? It's 35% down to 22%. You're at 22, they're at 35. How much is that? See, Karen, how I make them do the math?
So about 13%.
All right, so yeah, we're 13% behind, right? So, but that's actually a tip, is make your client do the little math, right? They see it, they're starting to do it, they get it. And if you say it, that number's real. If I say it, you can argue with it, right? If you say it, the number's real. So now I'm going to use, well, let's just see what it looks like for the average person if we did something by 13%, right? So let's do this thing. I got this little spreadsheet. I just do what if scenarios on there, right? So, hey, what's one thing cost in your world? What's one thing cost? Because we're going to do this one right here, this price increase.
Yeah, we could say a loaf of bread's $1. Wholesale's $1.
All right. So you sell it for $1. We're going to increase it by 13%. And now you're going to charge them $1.13. Now to you, that 13% represents $400,000. To your customer, it represents 13 cents. You okay with that?
Yeah, absolutely.
All right. So that's basically what we're talking about, is when you say, I don't know if the market will absorb it. I mean, how many times have you absorbed 13 cents on any product that you bought and you didn't even realize it? Right. A lot of times we're not even looking at those cents, but to you, it's $400,000. I want you to think about it that way. That one move from $1 to $1.13 is $400,000 to you. Make sense?
Yeah.
And because I'm gonna go back to your numbers, and actually, if it was you, I would make you tell me your gross profit number. But I'm gonna go back and look at the data here for this company that we're using. Gross profit dollars, he makes $857,000. Okay. That sample data we just used. So he makes $857,000 now. Let's just 857. You would make $968,000. So you're going to make, quite a bit more with just 13% increase there. But that's just a revenue increase. That's not the sales increase, right? Or a sales increase. That's why it's not the 400,000. What was he in sales? That's the number I need because this is a sales number. The sales number was 3.8 million, 3812. That's what the sales were. Where's that at? So 3812, that was the sales. 3812. There. See that difference? $495,000 difference
Yeah.
is the thing. 13% means that much to you.
And I like the way you broke that down and it's 13 cents per.
Yeah, that's where I always start. Like, one thing, people come in and buy a loaf of bread. If it's $1, hey, it's 13 cents, right? Most people are not going to argue with your price increase at 13 cents, especially today. All right.
Is
So,
that,
go ahead.
interrupt for a second, is that scenario builder, where is that located at?
If you look, let's see, stop, share there. Let me share somewhere else. I think it was something that I created. Wait, that's back to the same thing. That created as for Don Odell. He needs something like that. I think it's. Are you part of the paid Facebook group?
I don't think so.
Yeah, so it's there in the paid Facebook group. So
Okay.
what I do is if you're not here, let me invite you.
Okay.
You can see that I need an essential repository. It's kind of wherever it is in the course, that's where it is.
Okay.
But because some people just want to go right to a place, there it is. It's a lot of the stuff that I use is right there in one spot.
Okay. I will
Right.
check that out.
You want me to invite you by email or to this, or do you already find it?
We'll do that. I might want to do that out of the.
Oh, that's right. Yeah, I can't do that on live stream. Okay. Yeah, so it's right here, clear the noise, the paid group is where all
Okay.
the right. So when you're, for your membership. Okay, cool. Good. So Jeff, let's kind of keep going with you real quick. All right, keep going with you. When we were back on hidden cash, what were the 3 things we had to do?
There.
So I can come here and say, okay, are we going to increase price, Jeff?
Yeah, we're going to increase price. So we're in
That's
progress.
something that's in progress, and that's the wrong one. And you're going to be doing that. That's in progress. Check pricing. And I'm actually going to edit that and say, just to get you up there. That's probably going to get you close to the gross profit, the average. Okay. The other thing it should do is improve the sales to assets, right? So instead of finding more customers, we get a little bit more out of each customer. Now, the other things that we had on here was that we need to reduce excess inventory, and I needed to, review your collection process. So let's just start with the inventory master. I'm going to open up the spreadsheet here. All right, so Jeff, what I've got here is this inventory master worksheet, right? And it helps me kind of just maintain the right levels of stuff. And instead of retyping this in, and in the new app, I'm just going to have people copy and paste it in, and I'll do all the work behind the scenes. But here, I'm still using a spreadsheet. And can we just use these as just examples?
Yeah, absolutely.
I mean, I know they're probably not bakery goods, but still. And this is what you pay, right? This is the price that you pay for cotton candy beer and dog food and wall buzzers, whatever it is that we've been messing around here. And at the beginning of the month, right? If we're talking, I say, hey, that would be part of your homework. I need a list of stuff that you're buying, how much you pay for it, and how much you have on the shelf. I need those three things by the time we meet again, right? That would be my first homework for you. And then during the month, we're going to just record how many did we buy during the month. And at the end of the month, we're going to go count again, right? So we're going to know a beginning inventory, how much we brought in, and the ending inventory. And that is the basic cost of goods sold formula. Beginning inventory plus purchases minus ending inventory equals how much we used, right? So on any given month, you kind of use 12 cotton candy beers, a half a case of, because you got to remember how you buy these, like how many numbers are in there. Like if it's a case of beer, or a case of beer is 24 beers in a case, right? And we sell it each. So that's why it's cost per. See how this is? Like I buy one case. That's what this is. I buy a case for $25, but there's 24 beers in there. So each beer cost me $1. Make sense, Jeff?
Yep.
Okay. So when I talk about the gross profit that we're looking for, in your case, it was 35%. We should be charging $1.63 for that beer, right? That's basically what it's saying. But people might pay more than that. That's actually good in our favor. We at least know the minimum. If we discount it, let's not go below that. But if we can get $4 a beer, even better, right? So we'll make $2.94 every time we sell a beer. Now, what this tells us is just pricing. And then if I want to do any type of clearance, I know what not to go below. Because if I charge below, if I do this at $1.50, it's going to give me this, hey, wait a second. You're going to make, you're not going to make money on that, right? You're going to be below your target goal on gross profit. So I'm trying to give you visual clues instantly about how much to price. If you mark it down, don't go below a certain price or you're hurting your gross profit. Because it's okay to mark down, to have a markdown strategy. It's not okay to keep just eroding at your own cash. Here's what I do with that though. See how this is kind of that salmon color? Is that over the course of the year, we're going to set our par level. Par means how much we should have. Like if the average month we sell 12, well, that's going to tell me how often I should reorder it or how much I should reorder when I have to reorder. So let's just see what I do here. When I say click to set par order, it actually sets it on this sheet. I just come here, I say pull the data. I got the macro turned off on this one right now. But I pull the data and it's going to populate all of my inventory at once. Whatever I did on the one sheet gets populated on the next sheet with just one click. I got it turned off on this one. But so it's going to tell me and then give me the average per month, right? I buy 226 cases of these wall buzzers, or I buy 24 cases of Amberbach. Make sense? That's kind of the average that you buy. Now, what you're doing though, is you're also saying, how often can I get this? Like if I can order something and get it every week, that's 4 times a month. If I can get it every other week, it's only 2 times a month. If I can only get once a month, I order it and it takes 4 weeks to get here. It's only once a month, right? You see that? What we're doing is when I make the order, how long does it take to get it? And if I make an order on Monday, I get it on Wednesday. That means I get it 4 times a month. Makes sense? Now, here's why that's important. Because if I sell 24 in a month and I can get it once a week, I might give myself a little safety amount just because it makes me feel weird. Or maybe I've got Super Bowl coming up, so I need more cases of beer, so I can add to it, for certain months. But it tells me I need 7, right? And if I go in and I count 5, how many should I order?
2.
2. So instead of guessing, Jeff, when you go in there, go give me 5 of those and 15 of those and 25 of these. take a few more seconds because you're going to keep more cash in the company and go, oh, I don't need 5 of those. I only need 2. Or if you see red and negative, I need 1, but I have 6 on the shelf. How many should you order?
Don't need it.
Don't need any. So you don't order, right? So that's basically what we're doing is we're saying, I know what I should order when. So this is how we're going to clean up your inventory, and that $90,000 extra that's sitting on your shelf. All you have to do is nothing, and you get $90,000. You okay with that?
No,
You're like, well, how do I do nothing?
do nothing.
Because we're going to find the ones that have red dots, these red backgrounds. And I don't want you to order anything, right? When these are red, don't order those. But keep using them, which means we're going to get the money from the sale when you use it, and we're not going to use money to bring more in until it gets below a certain level, because we only need 1 of these, and we got 6. Make sense? That tells us how much we need to order. And of course, this is the trends. And the reason I use the trends is for seasonality. Sometimes we'll see something that's coming up that, oh my God, don't forget Mother's Day. Don't forget, whatever it is. 4th of July is coming up and we do those strawberry cakes all over the place. Okay, so that's how we're going to put $90,000 back. Is first of all, we have to organize your inventory to a point where we see how much you have and how much you need. Okay. And then we do the actual adjustments. Now, that's how we do that. And then from the process, what we would do is actually organize your process for AR. So we're saying, okay, how are you invoicing? What's the process? And we're going to look for any choke points. Because the thing about accounts receivable is getting the invoice out fast and then having a good reminder system set up for people to kind of bring it in, right? Without being too aggressive where people get turned off by it. So it's kind of a balance that we have to go through. So, Kara, what do you think about that? We just put, $700,000 in his pocket.
Amazing.
Yeah, I mean, it's you still got to do the work, but
Right.
look how fast we got there. Less than an hour, he's got homework to go do that we can check on next time, right? And he's going to leave the meeting with, oh my God, I know exactly what to do. Most advisors tell me, they go, I tell them what to do and they won't go do it. If I just told you you're getting $700,000 by doing this, this, and this, you're going to go do it.
Yeah.
Yeah. Yeah, but people don't argue with that when they see the money. Now, Karen says, it's just us. Do you want to see a little glimpse of the future? What I'm working on I'm shooting for November, but if I can get it out in September, I'll do that.
Sure.
Yeah. So this stuff that you saw is kind of the basics. You got to remember back in the very beginning, I did a lot of this by spreadsheet, right? I mean, I built cash flow tool back before pre-COVID, then I started consulting and I did a lot of this by spreadsheet. And 2 years ago, I built this app, right? Which is the app that you see me use all the time. What I've learned now from using it more and more and more is that this is me, I don't like to go out and find those spreadsheets. So you see here, Clear Path to Cash version 2. So I'm taking everything that we've done and the spreadsheets and I'm putting them into the new version of the app, which, when I built the first one, everything kind of improves. Now I can use some AI stuff. Maybe I can, do some other things that, help. So this is kind of instead of the dashboard that looks like this, you're going to have a dashboard that looks like that. And if I don't want you to see my clients' names, I don't have it on this one yet. Oh, here it is, hide names. There it is. I just go that and then you can't see it, right? If I'm showing it to you. All right, so that's one way you can do that. Now, the other thing I'm doing here is this sales calculator, which means if I'm doing a sales call, I don't have to go through all this hassle. I don't have to save and create a company and all that. I just come here, type in a few numbers, and it's going to give me some results to talk about, right? And that's how I sell, is that I'll just type in the few numbers instead of, making it a lot easier. I can go here, tell you the story, turn things on and off, just like it works the same way as the other one. It's a little bit different, but it tells you the potential of how much money is actually there. And if you want to be a client, hey, it will convert that into a client file, right? So otherwise, you're not taking up spaces and stuff like that. So you can just convert,
Mhm.
right? If they want to become a client, but you say, hey, listen, I can find you $200,000 right now. Would you like to be my client? My fee is $2,500 a month or whatever your fee is. Would you trade $2,500 for the opportunity to go get 200,000? And most people say yes. There you go. And then I also tell them in this one kind of the value of their business. He's like going, my job is to make this number go up.
Mhm.
I want your company to be worth more tomorrow than it is today. All right, so that's part of it. Now, the things that we all worked on together. What was the first one we worked on, Jeff?
Clear the noise.
Yeah, we got the client conversation coach who kind of walks you through what to do, right? That was a new person. I can just go here. Hey, what's been going on in your business? You type it in. I'm going to be telling you what's happening in that business, just using their words, right?
Mhm.
So, and it will go through there, and that there'll be a point in time where it will actually tell you the burning issue, right? That failed because I didn't put anything in there. But I've trained it on how to identify the burning issue with words that people say. Okay. The other thing is I need a playbook, right? What do I do if I find a burning issue? So you click on cash flow, and I'm going to give you some key numbers from their stuff, things that you can start doing. The action items are already there. You can add it right to the log. So I'm building out automated action items that you can just adjust. And we said we want to go to minding your business. So if I go to minding your business, there it is, right? Same thing. I can turn things on and off. And I have those numbers instead of having to scroll down. Remember how am I to the industry? Or if I want to compare myself to my goals, that changes. Me to the industry, me to the goals, right?
Mhm.
You can do that. That's already set up for you. And just a workbench. What if? Hey, what if we did this by, instead of going to the what if builder, I say, what does right now, this is where you are.
Mhm.
32, your goal's at 28. I know that's weird. That's a weird goal. He's better than the goal. What what if I was even a little bit better, right? How much will that help or hurt, right? I'm changing the goal. You see how I changed the goal? So it's at 0 when I'm at my current performance, right? Current performance, my goal. Here's what 1% increase in your goal does, right? $66,000. So that's how I get it. Hey, these small movements are going to make big money for you, right?
Mhm.
One thing, look at that. 60, 84,000. Go from 32 to 33. Do you think your customers will notice a 1% increase in price? Or whatever that is. Or cutting your operating expense. You're at 22, we want to be better. These little bit of incremental changes make big differences in how much you can make. Like,
Mhm.
hey, you're at 22%. If I match the industry, and I just cut cost by 10%, I can put $100,000 in your pocket. So that's how I'm getting people's attention on these small movements will make big impacts, right? And then you can generate a plan or apply the aggressive scenario to everything or modest scenario to everything. I'm making it easy for you to just make quick choices. All right. From there, I've got the fast money formula, which is about the cash conversion cycle. So the fast money formula gives me a visual, right, of how much money I have versus how much I need, right? And then hopefully it flips where the green is bigger than the red. But down below, it's showing them how things move, right? This is for an inventory-based company. Sits on the shelf. You wait that long to get paid. You're paying your bills this long. You have a financial gap. Can you make the gap small enough where you don't need additional funding? Or if you need additional funding, what do I do, right? How much do I put in? So here I'm like going, what if I collect a little faster, right? And it changes all your numbers. What if I have less inventory, right? See how the gap gets smaller, right? So I'm showing people how things move together in this. If it's a service-based company, it will change the chart, right, to a service-based company. Some people will go, well, I'm both. Okay, well, I built a hybrid. How much both are you? Are you 50/50? Are you, how much both are you? More inventory, more service, but you'll be able to do some type of revenue split so you can figure it out. So that's fast money formula is coming. Another cool one, like the home run. He said he had an education problem. That's where I use a lot of times the home run financial system. Say, hey, let me just teach you 6 calculations that tell you a little bit about your company. There's trends, expense control, debt to equity. Do you have mismatched financing? What's your cash flow activity pattern? How much could you borrow if you were trying to get a loan? All of a sudden, he's got 6 things that uses the income statement, the balance sheet, and the cash flow statement all in one page. Right. And I give him a grade. So I figured out a way to grade folks on this stuff as well.
Mm.
Next thing I like is like the inventory master, right? The inventory master is going to do all the stuff we just did. Hey, you're low here, you're overstocked here. I can just paste from another product into here and it fills out all of your inventory catalog. I can download a count sheet, right? So when I want to go count the warehouse, I already have the list of everything. I just put it down, right? I can do it on a tablet. I can do whatever I want to, and then import it back in, and it updates all your totals for you. If I need to purchase, I can just do a bulk purchase by a supplier, right? Pick a supplier and do a purchase that way. Like, here, this is all the things I buy from them because it organizes it for you. I want to order that, record the purchase. I just bought it from them. It's not going to make the order, but it gives you a sheet to do it with, or generate the order sheet. Like I want to order this and this and this from these folks that I need to order from, and it creates an order sheet so you don't have to go count the warehouse. After you did count it, it's going to tell you everything you need to order next of what you're low in, and it doesn't go past your par, right? Because it's going to set par for you. And how's it set par? You go here, and you got the overview, the performance, inventory. Here it is. Monthly usage, safety stock, calculated par. It does that for you automatically inside the app. And what's cool about that is that once you have the inventory master, I can set my pricing for everything, right? I got the pricing and bid calculator. I'm going to say this is what it should be. You need to, raise this price or update the price. Like it's at 850, I need you to be at 857. Right. So I'm doing all that math for you, and you can just update it and print out a sheet and go change your prices. If you want a markdown strategy, right? When do I want to start marking things down and by how much? And you can create a markdown sheet. Go change your prices to this week. If I want to do a bid, I got all the stuff from my inventory catalog. I can create a bid with. I got labor here. Put in people's hours and times, and I can make a bid, right? And I can save bid templates so I don't have to redo it every time, recreate it. I'm like, I need it for decks. I need it for whatever it is you're trying to bid on. Let's see. What else is cool in here you might like? Financial doctors ratio analysis. Oh, this process optimization or forecasting or evaluation. Start with the end in mind's kind of cool. Because this is about managing all your goals, but also telling you not to take money out if you haven't met your cash reserve yet, right? And you can go over here and set your cash reserve policy. If it's a stable business, maybe 3 months. If it's highly volatile, maybe 6 months, or you can change it to anything you want. So instead of a client going, oh, I feel like I got a little extra money, I'm gonna go buy a boat.
Mm-hmm.
It'll say, hey, don't take any money out right now because or if you take that much out, you're gonna bust your reserve, right? So that's what this is. It helps them manage, hey, here's your reserve status. You can take it out when it goes past, right? Once you're past the reserve, then it'll say, okay, take out your transferable value amount. Take out, it's going to give you all your goals that you're trying to do. And you can combine goals and work on them together. And there's kind of a goal timeline saying, I'm going to save for all this time, and then I'm going to use it. Like I'm saving for retirement for 15 years, then I'm going to use it for 25 years, right? So the different colors are how are all my goals laid out? What does my life look like that I'm doing right now? So that is a glimpse of the future. What do you think?
That's amazing.
Yeah, so everything that we're doing, I'm trying to say, okay, I have all these little tools,
Mm-hmm.
all talk and work together.
Mm-hmm.
There's still a few bugs in it, but I think, again, my goal was always November. I might be able to get it in September. And the cool thing is that uh, even if I don't do the integrations, we'll say with QuickBooks and Xero and things like that, I can just copy and paste, and it does. The AI will parse it for you and throw it in there.
Mm,
So instead of typing everything in and say, "Here's my income statement, here's my
Yeah.
balance," and throw it in there.
Jackie York says, love this. No comment from Jackie on the live feeds. Appreciate Jackie tuning in and giving us the big thumbs up.
Hey, Jackie, don't forget you're already in for November, right? So if you want to learn how to do these calculations, the clear path to cash, November we're doing a 2-day live event where I'm doing the full clear path to cash webinar, and Jackie's already in, and so is Felicia Dixon. They're already in, and 2 more. So we got 4 already, and we just started this week. Put it out there.
Wait, no, and we'll see Karen. Karen's really thinking about it now, Mike. I can tell.
Hey,
I came across it this week, actually. I was like, I've been wanting to go to San Antonio. I'm like,
It's absolutely worth being there live. I think just being there the last couple times that I've gotten to go, I presented last time, but just standing on the outside and watching how Mike's able to really drive home everything. I think there's the folks that are on Zoom absolutely have a great time, but there's power proximity inside the room. So I hope to see you.
Yeah.
all right. Well,
Yeah.
I appreciate your time. Thanks for spending an hour with me, Karen, Jeff. I
Yeah,
appreciate.
absolutely. Yeah, appreciate
Hopefully,
the insight,
I
Mike.
can make this thing grow over time. You just got to go through the it's new phase.
Yep. Yep. We'll see you next time.
See you next time. We'll talk.
Okay. Bye.
Thank you.
Go out and turn off the live. Live worked out, huh?
Yeah, man, we're still live. Still
How
live.
Oh, I do it from